Welcome back, investors. Ticker Time News. I'm Adam, and on the screen here is 2022 in the tail end of 2021 on the S&P 500 ticker SPX. Now, there is an orange line that I want you to pay attention to. This is important for CPI tomorrow. This is important for the FOMC meeting tomorrow. This orange line that I am highlighting just above it, this orange line, this represents the Fed's balance sheet, right? And since early 2022, that balance sheet has been getting lighter and lighter and lighter. And what has the stock market been doing since the Fed's balance sheet has been getting lighter? Well, the stock market's been going down since that. The Fed is taking money out of the markets, causing liquidity to dry up. That's why the stock market is down. One of the many reasons, but it's a big one. If you look to the left side of the chart, it's the orange line is kind of buried in the candles here, which makes it really hard to see, but it is basically just kind of going right along in between the candles. So as the Fed is putting liquidity into the market, guess what? The markets go up. Now, the Fed is not planning to stop or slow down offloading this balance sheet here and taking liquidity out of the market. That's going to cause the market to continue to suffer. Now, I just wanted to point that out real quick. And now let's get into the meat of it, the CPI report. Let's zoom in here after I take this orange line off. I want to zoom in here and look at today and talk about tomorrow, okay? So the market today, well, it was a pretty positive day, to be precise, with right around an hour to go before the market's closing bell rang. The main indices, they all rallied with force not seen all day. So the question is, are investors preparing for a surprise in CPI tomorrow, or do they think they have it figured out, right? It's a good question to know. So with today's 1.4% move, I have to point out that tomorrow's CPI expected move is 1.5%. 1.5% move. That could take us all the way to the top of the weekly expected move if things were positive, or it could bring us back down below a key support level of 3,900. Okay. So watch that. Tomorrow, when the market's open, depending on what the report is, it could shoot up and gap up 1.5% to the upside or 1.5% to the downside and then move from there. That's not out of the question. And the move for tomorrow, which would be Wednesday in the FOMC meeting, it's an even bigger move than 1.5%, but we'll talk about that tomorrow as we get closer to FOMC and we see how the market digests CPI report. Now, just real quick on the Fed and the FOMC meeting. Right now, 73.5% probability of a 50 basis point rate hike. I'm so used to saying 75. And there's a 26.5% probability of a 75 basis point rate hike. How's it going, sir? I did not see the SBF news. What did he do now? I know he's going to Congress to remotely testify in front of Congress tomorrow. But besides that, I have no idea what that clown has said. Oh boy, I'm sure it's something fantastical, something absolutely crazy that you wouldn't think would have possibly or could have happened. It's just mind-boggling about that dude. No way! Did he really? Where? He got arrested. Wow. Which country? I know the Bahamian officials, is that how you would say it? I know they were looking into where money went. Yep. Okay. That makes sense. Boy, Congress isn't going to be happy about that because I highly doubt the Bahamian officials, I'm not even sure how to quite say that right, if that's right. I doubt they're going to let him appear remotely in front of Congress tomorrow. Wow. Wow. That is interesting. That is very interesting. Let me just jump ship here real quick and just look at Bitcoin real quick. I wonder if this right here is in connection with that news breaking. No. No, because it would have happened. Did it happen today or yesterday? I guess I could Google it. Oh, wow. 45 minutes ago, 38 minutes ago, 1 hour ago, arrested in the Bahamas after U.S. files criminal charges. Whoa. Wow. Really? I thought for sure that he was expected to remotely talk to Congress tomorrow. Let's just see here. Co-founder, yep, we know FTX. Arrested in Bahamas at the U.S. Attorney in the Southern District of New York shared a sealed indictment with the Bahamian government. His arrest is the first concrete move by regulators to hold individuals accountable for the multi-billion-dollar implosion of FTX last month. Wow. Is expected to be extradited to the United States. Interesting. Let's see. I wonder if they say anything about. Oh, he said it on a live stream 2 hours ago. Wonder if he knew he was getting arrested. So what do we got? We only have 2 mentions of Congress. Bankman-Fried was replaced by John J. Ray III, who had overseen Enron's bankruptcy. Ray is also scheduled to testify before Congress this week. That's it. It doesn't say anything about SBF. Interesting. Wow. Afraid of the paparazzi? Really, dude? You try to put your company's name on everything, and you're worried about paparazzi. Wow. Okay. I guess the federal government here can pursue wire and bank fraud charges. SBF could face life in prison without the possibility of supervised release. We'll see. When you mess around with the wrong people, you're going to get punished. Such a severe punishment would be unusual, but not extraordinary. Ponzi scheme mastermind Bernie Madoff was sentenced to 150 years in prison, an effective life sentence. Already triggered the demise of BlockFi lending and has shown the entire and has thrown the entire space. He literally just said that on the stream. LOL. Yeah. Wow. Interesting. Interesting indeed. Okay. So it doesn't really seem like crypto is reacting to that, with Bitcoin hardly moving. I mean, Bitcoin's been still for several days now, and it is holding above its trend line, surprisingly. Actually, going back to that fall right there, November the 10th, it's basically moved sideways. See, I still like Bitcoin, no matter what SBF did, FTX. I still like Bitcoin. Other altcoins, no, not interested in, not one bit. Ethereum, I'm still partly to mostly interested in. But Bitcoin's the main one, right? It's decentralized. It can't be touched from what we have been able to see so far. But it's the third party that can mess things up. Like, the majority of people can't access Bitcoin without going to a FTX, previously going to an FTX or a Binance or Coinbase or BlockFi, which is now bankrupt too, without going to a third party like that in exchange. And finding a trustworthy one, it's going to take legislation or some sort, I don't know. It's going to take something to convince people to stick with Bitcoin. I think the other altcoins, yeah, I don't think they're going to do so hot. It'll be real interesting to follow for sure. I've not done anything with Bitcoin. I hold Bitcoin. I hold some Ethereum, and I hold no other. And I won't. But I will follow Bitcoin. Okay, moving off the crypto world, that is just crazy that he got arrested. I didn't see it coming. I was hopeful that it would come, but I didn't see it coming. Okay, let me try to refocus myself here on the stock market and CPI coming out tomorrow. I was joking earlier today. Let me go to the 5-minute chart here real quick. I was joking this afternoon that, was CPI accidentally released? Do market participants know? Because that last hour of trading today, this is the 5-minute chart right here. And you can see today on it, okay? And that last hour, look at how that last hour just, boom, it took off. It just took off. And I was like, okay, did CPI leak? Do, some of the big dogs know what the number is? Because the information, the CPI information, it goes through multiple people's hands, and of course it could leak at any time, but of course then that's breaking the law. Because news organizations can get it and have to, it's bargoed until a specific date and time. So it'd be 8:30 tomorrow morning Eastern. And then boom, it can come out and everybody can know. Now, the year-over-year number is 7.3%, and the core year-over-year number expectation is 6.1. The month-over-month, I'll get into that a little bit later on. But again, I'm thinking about this crypto stuff, and I'm completely derailed from what I wanted to talk about here. So wow. I'm still surprised. I'm glad they did. I'm glad they did. Now, can all the retail investors who use the platform, because it just blew up, that platform was second in the world. All that money gone. It's, I couldn't imagine. I couldn't imagine. Okay, let's see here. What do I want to talk about? Can you tell that I'm just completely knocked off guard here? I don't even know where to go, what to do. Let's start here on the daily chart, okay? CPI is coming out tomorrow morning before the market opens, okay? That is going to be the focus of investors. Now, on Friday, I was talking about, since we reached the top, the downsloping trend line that has stopped every major rally in 2022, since that point, the market has sold off, right? Last week was just, isn't it crazy? Last week was just down, 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 all around. Now, with last week being down, I was thinking, okay, our market's selling off ahead of next week, because the major indices were down between 2.8% and 5.1% last week. So were they selling off in anticipation for this week, since we get a read on inflation tomorrow, and then on Wednesday, we get our rate hike decision, plus we get the summary of economic projections, which is very important, okay? The last time we got that was in September, okay? And if we go back and look, let me move back here to September. Was it right here? This right here was CPI day last September, in September, when we got the summary of economic projections. The last time we got that. And it basically shows a whole bunch of information. Where the Fed could be taking the terminal rate, where the Fed, or how long the Fed could be holding it once it gets there. That type of information is in that report. So back in September, the last time we got that report, the day before, the market was up 1%. I mean, it gapped up in the morning and then it ran all the way to here. But then we got the huge gap down and huge red candle being down 4.3% on that day. The summary of economic projections is what caught the market off guard. So, are we going to see a similar fate? Now, going into the report, the market wasn't selling off, the market was rallying, okay? Then once the report came out, then the market, I mean, it sold off, and that's where we went all the way to our October 13th low, intraday low for the market, which was, I believe, the October CPI print, right? Yeah, it was. That was the October CPI print. So here we are now. We're selling off the week before pretty radically. And then we get to today, Monday. Let's go over the weekly expected moves for SPX. I'll try to get my focus back on track here. I'm still just mind boggled. Okay, so on Friday, when we sold off, we disconnected from the 5-day EMA, reconnect with it today, and then we also tag the 50-day. No, where is it? Where is it? It is right here. This is the 20-day moving average. We tag it. That's where resistance kind of stepped in right there, right about where we closed, the 39.90. Now, 4,005 is a sticky level, right? Well, 4,045 is the upper end of the weekly expected move. And remember, at the beginning, I said that the options market is pricing in a 1.5% plus or minus move tomorrow. So if we go up 1.5%, well, that puts us right at the weekly expected move, around 40, 52, okay? 40, 45, 40, 50, right around there. For some reason, I'm not getting precise here with the 1.5. But if we go in the opposite direction, 1.5, well, that takes us to the low, or just below the low, from Friday, okay? So it would erase all of today's gains plus the losses from Friday, okay? 1.5% move in either direction, plus or minus. That's important to know. Now, today, the S&P 500 did fade back to its Friday closing level, 39.34. Now, this happened shortly after the open, but buyers stepped in at that point, okay? And they didn't let up. They defended that line. And 3,900 is a very sticky level, all right? And if we get down to, Friday's low again tomorrow, 39.34, will that be a sticky level, or will it have to go and push past that? Because just think, we have seen 2 sigma moves many, many times this year, okay? 1 sigma move is your weekly expected move, right? So if we open right in the middle of the upper end for the weekly expected move and the lower end, okay? 68% of the time, that's where we close on Friday. Now, if you go and make it a 2 sigma move, which would be like down here and like up here, well, 95% of the time, maybe even up to 98% of the time, I don't remember that last number, it's either 95 or 98% of the time, that's where the market will close. So, I mean, it covers nearly the entire market. So we have seen 2 sigma moves like that before. It could happen again tomorrow if the market is caught by surprise. But it also, with last week's selling and today's nearly 1.5% gain, it seems like the market is setting up for this to go either way, right? Sold off sharply last week, rise today, and now the market is ready either or. Whichever way this thing goes, now the market is ready. Now the market is prepared. But it could still get surprised, right? Now, the main indices, they oscillated in a narrow trading range all day long before taking that noticeable turn higher that I pointed out on the 5-minute chart. And let's just go over here real quick. We'll go to the 15-minute chart. I know I'm kind of spotty today. That SBF news has got me very curious. I want to know more, and that's how my brain is thinking about right now. All right, here's the 15-minute chart, okay? Now, if you look at today on the 15-minute chart, it looks like an okay day, right? We have that sell-off in the morning. We hold up the low from Friday. We narrow trading range the majority of the day, and then we rally into the close. We get up to 39.90 and stop. Hard resistance. There's a hard stop at 39.90. I don't think that was by luck or chance. I think that was by design, right? This move this afternoon, it was interesting because it seemed like there was some sort of algorithmic trading or maybe buying program, and it went up and boom, it just stopped 39.90. It's like that's where everything was. That's where everything was programmed to stop, ready for tomorrow. Now, there wasn't any specific news catalyst either to account for the move made this afternoon. But it did coincide with the S&P 500 clearing resistance at that all-important 39.55 level that I've talked about many times as being very sticky, 39.55, which ended up being a breaking point on Friday when that zone failed to hold as support. Now, there was a release from the New York Fed that showed a decline in median inflation expectations for the 1, 3, and 5-year period. Plus, the CBOE volatility index, that thing soared today 9.6%. Now, that reflected the increased hedging activity in front of the November Consumer Price Index, which comes out tomorrow before the open. Then on Wednesday, again, the FOMC decision and the release of the updated summary of economic projections. That's on Wednesday. Now, the November Consumer Price Index, like I said at the beginning, 7.3% is the year-over-year number. The month-over-month number is expected to be 0.3%. Prior reading was 0.4%. And the core Consumer Price Index, year-over-year, 6.1%. Month over month, 0.3. Now that 0.3% was the same from last reading as well. Okay. Now, when we look at today, all good, right? Up 1.4, 1.5%. But if we just scroll back here and look, again, on the 15-minute time frame, S&P 500, ticker SPX. I want you to notice something here. Let me adjust this chart. The yellow box, if you notice this yellow box, and we're going back several sessions. When I stop, I'll show you how far we've gone back here. We went all the way back to November the 10th when it first broke in to this yellow box. So for about a month now, we have basically been trading in a range-bound box, only breaking out of it one time. And that was to go up and test the downsloping trend line that has rejected every major rally in 2022. So are we surprised of a 1.5% move today when we're just in a chop box? I mean, the median price here is, where is this at? Right around 39.60. Interesting. Okay. So again, with that 1.5% move here, as projected by the options market tomorrow, plus or minus, again, that could take us to the upper weekly expected range, which is 40.45, or the lower weekly expected move, which is greater than 1.5%, but that's all the way down at 38.23. With the weekly expected moves for this week, there was a greater spread on almost all of the products that I look into and I do the weekly expected moves for. Nearly all of them had much, much bigger swings from high to low. And that's because of the inflation data and the interest rate hike and the, oh, my mind just went blank there. Sorry, I'm so back and forth and all around today. You really got me. You really got me with that SPF stuff. Oh, okay. Economic projections, summary of economic projections. All of that is big data. It's big data that moves the market in a big way. So with that said, that's why there's a much larger swing between the top and bottom of the weekly expected move for this week. The options market is telling us to be prepared for it. And then if we, like I mentioned about the VIX being up over 9% today, if we go look at the VIX, just right quick, use the CBOE one. Look at this thing. Let me open it up and show you today's gigantic move. Look at that. Now, the VIX has been moving up over the past several sessions after a pretty big decline there, and that was the rally, the fall rally that we had. But it's popping up here telling us that this week, be careful. The markets are going to move in crazy and unpredictable ways. Okay? So keep that in mind. All right, let's go look at the SPY here on the daily. Open this up a little bit here. Now, the upper end of the weekly expected move is 406. The lower end is 380. 406 to 380. That's a pretty big spread. As a matter of fact, let me, I know I got it here. Let me open it up. Okay, for the SPY. Oops, that's not the right one. I thought I had it, thought I had it opened. I guess I didn't. Okay. All right, I don't have it open. Strangles don't really work much like it did earlier this year because premiums juice right before any major news. That is, yep, absolutely. Absolutely. Okay, so for the SPY, 406 on the weekly expected move on the upside, 380 on the downside. Let's go look at the Qs. When talking about the SPY, it's the same thing as the SPX as far as a 1.5% move. Okay, now for the Qs, the upper end of the weekly expected move, 293, and 270 is on the lower end of the weekly expected move. So you can see the options market is leaving us plenty of room for downside, right? And let's just go look at the 15-minute chart here right quick for the Qs. And same thing if we're looking over a big span here, that it's just really been in a box for a month now, right? Okay, so looking here, we could potentially short term, we can try to find a pattern here. It's the same pattern that would be on the SPY, right? Just like that. Change it to blue. Okay, now if we go for a larger pattern, you can see, which way can I do this better? This way? Yep, the rectangle. Look at this rectangle right here. And if I extend it, I mean, catching a couple of those lows. Let's line up the highs because they almost match perfectly. The high made on Friday matches with the high made today at the close. The low on Friday, today's low got a little bit lower than last Friday. All right, we can extend this out a little bit further, but then you see we are underneath that box now. So better not. Okay, now this goes back to last Wednesday. Just trading in a box, not really going anywhere. It's like fooling the market. It's like making the market think, okay, we're making big moves, but the big moves are going 1.5% up, 1% down, 0.5% up, 0.75% down. You can see right here that it's just like a mind game that the market is playing to make you think like we're actually moving somewhere when we're not. Okay. That's the Qs there. And it's weekly expected move in the 15-minute chart here. You could kind of, let's go and do this. Bring it back together a little bit. And bring that like so. Just bring it together a little bit more. I mean, I could just extend that box like this. And I mean, it's literally catching everything right down the middle. Sure, when we pop out of it, then you know, well, we need to go down. When we break underneath of it, boom, we come back up. When we get above it, we come back down. I mean, it's just the same old recycled story that we're living over and over and over again with it. Now, one thing I'll point out here for the Qs, and this should be noted for the SPX and the SPY, on the candles, okay? We have traded below now this rising trend line, okay? It caught and acted as support all the way up through the fall rally, right? Well, since breaking below that, okay, we are basically, from the point that we broke through, is basically the highs that we've been able to reach. Now, if CPI is cooler tomorrow than expected, it is possible that we could go up at some point soon and retest that, maybe get rejected and come back down from that. There's a lot of variables this week, and it's not an easy choice on which way to go, because CPI, FOMC, summary of economic projections, they're binary things, right? a 1 or a 0. Either the market goes up or the market goes down. There's no wiggle room in between. All right, let me go to the DIA, which is the Dow Jones. It is obviously one of the best performers in the fall rally, but still, look, over the past month, it's basically gone nowhere. Okay. The upper end of the weekly expected move is 344. The lower end of the weekly expected move, let me go to the daily chart. Let me fix this. 326 is the lower end. Okay. So if we do break outside of the weekly expected move, that 346, 345, that could be it, right? Because that would match the high from December the 1st, okay? That would be a really sticky area. Now, IWM, and then if you guys have questions, throw them in now, because I just completely, what would be the word to use for this one? I messed up this live stream. My thoughts are elsewhere now. I really screwed up this live stream. Okay, for the IWM, that's your small caps, 185 on the upside, 171 for the downside. So if there's one thing to take away from this, the options market is really pricing in heading lower, okay? Heading lower, not a rally. Even though we could get a rally tomorrow, I mean, the market is really set up for it to go either way. But the options market specifically, not the market at large, the whole market, but the options market is saying we're going lower. Okay. Okay. Sorry, I'm such a bummer. Maybe I can. So scatterbrained during this live stream. Maybe I can answer your questions. Maybe that'll help to focus me and get my mind off of it. I can't even think about what I wanted to say today. Okay, so what's your guess for tomorrow? Okay, well, my guess for tomorrow, you all know it's a binary event, right? It's either good or negative. It's either cool or it's hot. Since the producer price index came in year over year, it was down. Month over month, it was hotter than expected. Okay. Our core CPI is expecting the same 0.3% as last month. Now, when you go and you look, hold on, let me pull this up right quick. This is the CPI homepage, or Fred, okay? All right. In the last release, remember the title here, CPI for all items, 0.4% in October. This is for total CPI, not core. Shelter, gasoline, and food all increased. Now, food and gasoline would come out of the core reading. But if shelter was going up and increasing last time, I would have to say this time shelter is not increasing. Shelter, I believe, is going down. I think rents are coming down. Home prices are coming down. They're just not coming down in significant ways, but they are trending that way, okay? Since they are trending that way, and we can go look at oil, U.S. oil on TradingView, okay? And look at the trend that oil has been moving in since November the 7th. Oil has been trending down. So this is telling me that with these items trending down, shelter, oil, then maybe we could get a cooler reading than expected. Instead of maybe 7.3% year over year, maybe we get 7.1% year over year. Okay, that's what I would, and I'm going to pencil that down here, 7.1%. That's what I'm thinking it could be. Therefore, when we look at core CPI, well, we take out food, we take out energy, so it's really up to shelter coming off. So maybe we get to 6%. Instead of 6.1, we get to 6%. That's what I'm writing down as a potential for CPI tomorrow. You're thinking a flat reading? That's good. If the reading is flat tomorrow, that is positive in some sense for the market. And that could lead to a rally taking us to the upper weekly expected move, except the FOMC meeting in the summary of economic projections, that could completely take us back down. So maybe we're looking at a scenario where CPI takes us up tomorrow, and then the FOMC meeting, most importantly, the summary of economic projections, that brings us back down. That is a scenario that I'm thinking about for the two combined together. So overall, I think the week could be down, but by the time we get to close on Friday, with that economic of the projection of economic, I'm getting it messed up. All right. Well, I guess I'll wrap it up here for today. I don't really know what else to talk about. My mind has gotten completely off task. I guess the only thing I can add is just be careful tomorrow. The information drops before the market opens. So let the market digest it when the market opens, see how the market is going to react to this, and then you can react to it afterwards. That's what I am doing. Now, whatever trade I make tomorrow, it's going to be tomorrow only. I am not going into tomorrow with anything on the table, and I'm not going to go into Wednesday with anything on the table. All right. Well, I guess that is it for today. Thank you guys. As quickly as I can tomorrow, yes. Absolutely, yes. I will be sending it out as soon as I can read through it and summarize it. Hopefully before the market opens, it can be out. Okay. Well, sorry for a weird live stream today. Good luck with your trades tomorrow, and I'll talk to you tomorrow after the market has closed. All right. Have a good night, everyone. I apologize for this evening being off and crazy, but that news, first off, man, it just totally took me by surprise. So thank you. I appreciate the news and sharing it with me. And good luck tomorrow on your trade, seriously. And I'll be back tomorrow after the market is closed, and I will get a summary out of CPI as quickly as I can to our private investor community. All right. Take care and have a good evening.